Hey traders, Nick Shaheen here looking at CVS. Somebody asked me about it, and okay, so they had a positive reaction to the earnings. This is a daily chart, so every candle is 1 day. They had a positive reaction, a good spike on earnings of late, and they asked me, is it a good time to go long or not? So if I'm long already, I'll probably trim a little bit and then re-engage long a little bit earlier. So let me see, I think I kept the notes. Okay, so that's the same chart. I just marked it up a bit ago. So we have resistance from this area. You know, this was, they tried to break out and they failed. Took their time to try again, and the earnings brought them back straight up to it. So if I extend it, that'll be the same place, right? So it's still resistance. That's the first level of resistance. So what now? It's fading a little bit, but it's not a problem. First of all, this is the first tick I'd look for to hold. If not, this whole zone is supportive. This whole area from here on down is support. This includes a good test or a good while, so it's consolidated, so there will be buyers there. But first, there'll be this one. As long as we're setting higher lows, or we're tracing out a handle of sorts, so this becomes like a cup and handle, inverse head, whatever. It's a neckline that wants to be tested, and if they break through it, then they go a step higher, and the next level of resistance would be this whole zone right here. This is, for the same reason this is support, this will be resistance. Well consolidated. By well, I mean this is months. So I would have to get out here. So if I take it long, so what do? I put an alert. Tell me when it goes above 58 so I can chase it. Tell me when it falls down to here so I can buy it. Those are two entry points. If it falls down to here with no reason, special reason to go down there, I would assume this will hold, so buying it there would be better. So in other words, here is not an obvious buy. If I'm long it, I could hold it. If I was long it tactically for the earnings, I'd book it. But to chase it from here, I would wait for the breakout or for the breakdown to try to swing it high. And if it goes above here, this would be my exit point zone again. So it's interesting to see that this was the December lows for the whole market, and CVS went there. Not sure what caused that. So you might want to revisit why you're long CVS to begin with, fundamentally. Is this a cheap company? I'm not sure. Let's look at the PE. Okay. Okay, so they lose money, and they're not that expensive. Price to sales is less than 1, so on the face of it, I don't know a lot about it. But if you do, then look into the fact, why is it below the Christmas debacles? But again, this is the trigger point that failed it last time. Here we are at it again, so there is upside opportunity if I wanted to. So if I wanted to mark it up with not with crayons, but like a grown-up would. Okay, so this would be a place to chase it. And this will be a zone where it would find resistance somewhere around here. So if I were simply to do that, now we have a whole supportive zone here. So if this wedge breaks, it probably retraces back down to here. So these are the two scenarios here on the short term. All right, next signing out.